What's going on, traders? Welcome back to the channel. I hope you're well. So this volatility has been crazy. Today was a really historical day. We were down almost 4.5% and we made a round trip back up to close in the green. Outstanding. And it's just crazy, right? For the past couple of days, we've just been seeing red in the market, and all of a sudden we see that glimpse of hope. So in today's video, I want to show you guys and share with you what I am going to be looking for so that we can determine if in fact we are near a bottom. Okay, before we dive into the analysis, don't forget to subscribe to the channel, give this video a thumbs up, and hit that bell icon so you'll be notified when I upload these videos. Let's take a quick recap of what's been happening so far. Okay, without showing you our wave labels, we're just gonna review our traditional moving averages, the 200, 100, and the 50-day period moving average. So the reason why I'm showing you this is because right now it has been literally almost 2 years since we retested the 200-day period moving average. The last time we retested it twice at least was here back in July and June of 2020. Ever since then, we've been trending upwards, and now we have finally broke below it and we're trying to reclaim its support. Okay, now it's pretty important because everybody looks at this indicator, all right? Everybody looks at this moving average as a guidance, and now that we broke below it, it's really important to see what's going to happen next. Okay, are we going to retest it as we're trying to do at the moment and reject it, or are we going to blast through it and continue to reclaim as a V-shaped recovery to new all-time highs? That is yet to be seen. So let's turn on our labels and we're going to review our preferred account, and then I'm going to touch base on our alternate account for the SPY. So I'm going to turn on our labels and we're going to stay on the daily time frame. So in this daily time frame, we are still looking for a wave 4 pullback to give us some sort of support between the 38% and the 50% Fibonacci retracement of this primary degree wave 4. Now, I had before our 23.6% retracement, right? But we have been trending lower and it looks a little bit more impulsive that we broke below it. So yes, an argument to be made that we are still stuck between this range, and that's valid. So we're gonna leave it like that for now. Okay, so here's the thing. Let's review from from November the 22nd high all the way down towards January the 24th. Okay, because that's when that's the period of time in which we have been in correction. So I'm gonna take you to the 1 hour time frame, and I'm gonna walk you step by step as to what I am looking for. Okay, so from our highs here on January the 4th, we made our first wave 1 low, pull back into the wave 2, which was a 78.6 and 618 retracement of this decline. If you guys want to see it, so let's take a quick retracement and let's turn on our Fibonacci levels of that those ratios, and we're going to see that it was right between the 618 and the 78.6. Okay, so that's pretty valid. Then we started selling off heavily, and this is of course an indicative of a third wave. Okay, so we're still stuck between the C wave, and the C wave has 5 wave subdivisions. Now today's open was low, and then we started reversing, and now we're looking for a wave 4 pullback. Okay, we have all the way up towards north or south rather of the wave 1 to hover around, because if this wave 4 keeps on pushing on higher and we retrace above it, then this wave count is invalidated and we have officially reached the bottom. But I don't think that's the case, as we have already hit the 38.2% retracement. Okay, that's a key Fibonacci level for a wave 4 pullback, but it's pretty much directional. Okay, and this is already a directional wave 2. So I'm anticipating this to be a 3-wave pullback. So this was probably A, we get a B, and we get a C, and then we get the low. So here's what I want to show you guys, okay, because I'm sure this is what you guys are waiting for. In Elliott wave, something, and this is obviously something that everybody knows, and the logic of divergence, right? And when the RSI versus price action, okay? But utilizing Elliott wave with that concept of divergence, divergence starts occurring when an impulsive structure is almost about to end, okay? And they start occurring and start appearing in the wave 5 or wave C in this case, or rather in this case also wave 5. Now let's take a look real quick. Let's take a look at our RSI in the let's look at it in the 30-minute time frame. So we made a low here today on the wave 3 after this massive decline. Okay, since January the 13th. We see the RSI hovering, and now we made a new low. Now, based on today's price action, we jumped dramatically. Okay, now this is what I want to see. I want to see as we're making the wave 4. Let's label it here. Okay, let's label it here. Actually, let's do it with this guy here. So this is wave 4. Actually, no, sorry. This is wave 3. Okay, this is wave 4 from our price structure. And what I want to see here, right? I want to see that RSI is going to start reversing once we complete the wave 4, like so, right? We're going to start rolling over while price action starts rolling over at the same time. However, what we need to look for is a break below the wave 3. S&P makes a new low while the RSI makes a higher low, a clear divergence. Okay, we see price action make a new low while RSI makes a new higher low. This is the area, well, I'm not saying this zone, but this is that indication or the indicator or that signal rather that I need to see, that everybody should be looking for, because we are near the end of this cycle. If we get it, right? If price action makes a low, RSI makes a higher low, it is likely that we are going to be heading on higher. However, the caveat to this, on the other flip side of the coin, is that if in fact we continue to make low, right, we break this low here and RSI continues on lower and takes out its previous low, then no, I don't think this is the case anymore. I think that we are still in a larger wave correction, which now takes us to our next wave count. All right, but actually let's continue reviewing this. So once we hit the 38.2% retracement, right, assuming that this is the top of wave A, B, and C, and then we're gonna get equality, then what I'm looking for is perhaps a 2 levels, right, from the wave 1 to the wave 2, sorry, from the wave 1 to the wave 4. All right, I want to see equality, which is shallow, right? It'll be a shallow fifth of C of 4. So we have zones, right? We have zones from the 100% to the 1618, okay, to be looking for, which still falls within the range of being between the 38.2% retracement and the 50%, at which point we have to shift this down, or we can leave this wide gap, right? We can leave this range here because price action can hover around it as it wants for however long it needs to. Okay, now another level that we look for is from the wave 2 to the 3rd to the completed 4th, and we find equality, which brings us lower after the 50% retracement. So until we start making lows and until we complete this wave 4, I will look for that zone. Okay, we'll have this more completed, and also, right, this will be an area of high interest for a possible short position to take us lower. Okay, guys, so again, want to see divergence on the RSI while we're making a low on price structure. So I'm gonna go back up to the daily time frame. I'm gonna reset the chart. I'm gonna hide the preferred count, and we're gonna work through the alternate version of it. Okay, now the alternate version of it is suggesting, and this is pretty bullish, but it's more painful in the short term. So out of our COVID lows, which we completed the wave 4 in the cycle degree, right? We made our first wave 1 intermediate degree, wave 2 intermediate degree, 3, 4, and we made our final 5th of primary degree, wave 1. So this was an actual completed cycle, all right, in the primary degree. And now we're looking for a larger A, B, and C. So how does that compare from our previous count? It compares in that this is in fact wave A. We're looking for B, and we're going to look for C lower. All right, so that's what this is. We're going to look for, if I go down to the 1 hour time frame, okay, the 1 hour time frame will suggest that 1, 2, 3, 4, and 5. Okay, we will know relatively soon because of the magnitude on which we are going to be retracing to the downside. Either way, we're going to prepare ourselves by taking a possible short opportunity here on the wave 4. Otherwise, we will wait for this wave B and then down in wave C for wave 2. This is going to take us on a very deep correction, guys. All right, anywhere between 398 to 355 in the SPY, even as low as the 50% retracement to 323. So it's a big number to be looking for. Okay, I don't think this is the case, but it represents a pretty good opportunity to the upside once it's completed. All right, I mean, we could see massive bull market continue, but hey, don't kill me for this one. All right, this is just an observation because we have to have different wave counts, and I'm only considering it because of this price structure here. I'm trying to determine whether, if we continue to break the invalidation levels, what is our alternate version of it. So for now, we're gonna leave this one as our alternate version, and we're gonna operate under that version until we break key levels. All right, so over to the Qs. Same deal. So in the Qs, after completing our primary degree wave 3, hang on a second, let me adjust scale. We made our 3 waves to the X, right? ABC, now looking for the final fifth of C, of Y, of 4. Now, this one has already taken us below the 23.2% retracement of primary degree wave 4. Now we're looking for either a price structure between the 38 and the 50. Again, same deal with the SPY applies to the Qs. We want to see divergence, right? While the Qs keep on hovering here, the RSI will roll over, but will not make a new low, while price structure makes a low. Okay, again, and I'm gonna repeat this. Wave 5's divergence will show at the end of the cycle. Okay, divergence will show at the end of the cycle, guys. So we're gonna wait for that. We're gonna be a little bit more patient. We want to see this hold right wherever is going to find support. We want to see the wave 5 completed after it breaks its previous low from today, January the 24th, and RSI holding a higher high to make a clear divergence on the time frames. All right, guys. So you see the scoreboard here, pretty green. I mean, IWM was leading. SMH, we have the Dow closing in territory. We also had a really good rally in crypto. So let's see what happens. Don't forget that we have Fed meetings on Wednesday. We have tech earnings also on the way. So it's a lot, guys. It's a lot to be excited for. So I hope you guys will be prepared. Leave a comment down below with any questions you guys have. I'll be happy to interact. Subscribe to the channel, join Trending Waves. The link to the Discord group is pinned down in the comment section. So as always, thank you so much for tuning in. Thank you so much for your time. Bless you. See you tomorrow.